Hi, my name is Warren Barhorst. I'm the CEO of Iscential here in Houston, Texas. I often get questions from people about what's the difference between term life insurance and permanent life insurance. So when you look at permanent insurance, there's many forms of that. There's whole life, there's universal life, there's variations of those two products in a sense as well. But the basic difference between term insurance and permanent insurance is a permanent policy is designed to be there until you pass away. If you don't pass away and you live past the endowment period of the policy, it will then pay you the face amount of the policy as a living benefit. The advantage of term over perm is that term is usually more cash flow cost effective, where permanent would be more expensive because you're buying it to make sure that it's there no matter what the cycle is if you live past the term period from that. So many people will ask me the question, well, which one's better? And I say they're the same but different. And so if you have a definite need and you need to buy a lot of value and you have limited cash flow, I would recommend buying term insurance. If you have the same need and you have sufficient cash flow to pay for the permanent policy, I would recommend you buy the permanent policy because it has the ability to be there no matter what if you live past the term period. So people often ask me why term insurance is so much cheaper than permanent insurance. And the reality is their costs are similar if you do the economic comparison. So when you look at from a life insurance company's perspective, it basically shows that there's the amount at risk on day one. If you buy a $500,000 policy and a term policy, it's the same throughout the entire time period. When you buy a permanent insurance policy, normally the amount of risk decreases over time because the cash value in the policy, the accumulation of your funds that you're putting into it, build up over time, which makes the amount of at risk or the cost of the insurance go down over time. And that's how you get the cash value bucket inside the policy. The last thing you need to consider is the cost of ownership between term insurance and permanent life insurance. So if you do the analysis and you have a 10-year term policy and you paid $1,000 a year for it, you'd have $10,000 invested in the term policy and no return. If you put the same $1,000 a year into a permanent life insurance policy, you might have $6,000 or $7,000 of cash value in the policy, therefore making your cost of ownership only $3,000 or $4,000 versus the cost of ownership of the term policy, $10,000. Many people think term insurance is cheaper than permanent insurance. It's more cost effective or cash flow effective, but it normally is not more cost effective long term because the cost of ownership is higher for term insurance than it is for permanent insurance. If you want to learn more about life insurance, there's a great website called lifehappens.org. Go to it, check it out, and you'll see some stories about the impact of life insurance on families' lives and how they use the proceeds to do good things in the world.